What's going on, everyone? What's going on? Welcome back. What's up, Chris? What's up, Michael? I hope you're all having a good day so far. Seems like everybody took a day off for the Queen's funeral. Saw no headlines out there. Saw really, it was good market action for me. I had some pretty good trading today, but it more or less went sideways for the day. But some pretty easy trades today for myself. But what's up, Mike? How does you trade today on this lovely day?
Same here. It was not as good as it's been the last couple of days. I mean, kind of called an inside day today, and it's what we're getting right now.
Yeah.
But not a lot of stock trades. Pretty much two good indice trades, and that's about it. Knocked them down, lined them up, knocked them down, and now just falling asleep with this market.
I mean, not only is it a Monday, but not only did we have no headlines, not only did we have a pound holiday and it was a Queen funeral, but we have Fed week, or it's Fed Wednesday, so I feel like it's going to be a pretty uneventful or choppy / boring market until the Fed's, come and gone. So I don't know. We'll see, but so.
Yeah, I mean, we've got a pretty interesting week on tap for us. And there's not many institutions going to be putting on positions in front of the Fed. So if you think that you're going to see some wonky ass move to the upside, well, enjoy that fairy tale story that you tell yourself.
Yeah, I mean, honestly, in order for the really market to really just soar out of here, I mean, before Fed, it would surprise me if there's no fundamental news to make it break 3,900 again. But
we basically futures drifted lower off the 60 Minutes show with Biden, our wonderful leader and president, basically putting geopolitical risk back on the table.
Yeah.
Basically saying, okay, yeah, we're going to defend Taiwan with actual people.
What the heck? What was that about? Nothing surprises me anymore.
Like, we don't have enough to worry about.
Yeah.
Okay. We got Europe shit in the bed. We got, Russia. We got energy. We got the winter from hell coming up, or, the frozen over winter. And, inflation's running rampant. The economy's heading into a recession. I mean, I don't know how you can be bullish here.
Yeah. You know what? I'm sorry.
I mean, what in the world? I would love. Now we got our perma bull in Mark that's in there. He's already talking about a melt up. So, he's already Mark. I mean, you got to stop sniffing those bath salts.
God,
okay?
Mark, I love you.
I just want to know what the bullish thesis is here. Explain to me. Because I consider myself a rather rational person.
Yeah.
Somebody explain to me what the bullish thesis is.
And that's my thing is I'm not really a swing trader, so it kind of makes me unbiased as far as I don't really care if we go up or down. I just like market action, and for me being unbiased, I don't know how anybody could really form a bullish sentiment or opinion on the market right now.
You know what? Nobody knows what the F's going on.
No.
Right?
No.
And we certainly could go up, but I just want to know. I just want to hear from some of our perma bulls what the bullish thesis is, because I'm trying to grasp for one. We're not really oversold. Look, we have late volume today, and I always tell you guys what I tell you guys all the time: don't short a dull market. So the one thing we got going for us today is light volume. But I'm just trying to come up with the bullish thesis, because I just see too much shit. You got possible Biden in Taiwan. I mean, let's face it. If China invades Taiwan, all bets are off. We're heading to 2,900. Probably that day. Okay? So, you got that hanging out there. Now, again, I think it's October, which is actually coming up, is the best time. I was reading an article. Basically, October's the best time for China to invade Taiwan. They got a couple elections going on. They're going to have a couple, generals voted out. They also, that's the best time for, like, the seas and stuff like that, so they don't have, like, a typhoon risk and troops in factor. So, you got that kind of sitting there. Japan is a disaster. We're a disaster around the world. Does everybody forget about FedEx? I mean, FedEx, that was not a positive report. And then, look, okay, if your thesis is CPI still looks promising, listen, I'm telling you guys, CPI, what did we just not get last CPI? It just exploded up.
Yeah.
So
I don't know how it looks promising.
Rents are going up. Okay. Here's the problem with CPI for you guys that think CPI is topped out. Okay. This should make you shake in your boots. Okay. Because sticky CPI is going up. Rents are going up. Housing is shitting the bed. 77% of renters, a record number, are re-upping the rents because the rent's going up. And all this is happening, okay, where your great CPI forecast is coming from is because of energy. Well, if energy goes up, then what happens to CPI? And by the way, I told you guys, they recalculate the way they're calculating CPI. Fox News, and again, take it for a grain of salt, but at least the facts are correct, came out with a report that basically said if you're calculating CPI based off 1980s formula, it's actually 16.4%.
Yeah.
Okay, that's where CPI is. So.
Yeah, and Mark, on your note on why wouldn't the Fed pivot, I'll tell you why the Fed wouldn't pivot, right? So, in my opinion, the Fed's already accepted, and I know it sounds like they haven't, but I thought we were heading into a recession before. I'm almost solidly in my tracks that we're heading into a worse recession than I thought. And, with everything kind of going on as far as, well, the Fed can't really pivot yet because then once we hit that global disaster, they're going to have to then start cutting rates, and we're not at that point yet. So it's not really in the cards yet because they've already, I think, pushed us into a point to where we're too far and we're going to go into a recession. I think they've already accepted that, and I think Powell even already accepted that at this point. So it's just everything, and I'm kind of going with what Peter Schiff said as far as what he said earlier is the market's not reacting the way it should given all the events and geopolitical issues and inflation risks, and the market's not reacting the way it should, and he thinks that there's going to be a disaster out there. So kind of
I don't know. The only thing I agree with is the fact that with what Mark's saying is that everyone thinks we're headed for a global disaster, then everybody's on one side of the train. That's the only thing.
I feel like if everybody thought that, the market would be going down a lot more than it really is. Like look at VIX, like you said. VIX hasn't even, touched extremes. So, I know we're hearing a lot of doom and gloom out there, but we're not really seeing it in the market yet.
Well, and you got to look, as far as the Fed pivot, you got to take Powell for his word. Jackson Hole pretty much knocked the Bulls narrative right out of the park when he said, they're basically cheering the market down.
Yeah.
Okay. The problem is traders nowadays don't understand what a big problem inflation is, how sticky it is. Okay. And the secret that we've been telling you for a year and a half since we've been doing it is that the Fed, only way they can beat out inflation is to cause a recession and have the market to go down. And, let's look at the chart. Has the market really gone down?
Right.
Okay.
Right.
This is the monthly chart.
Yeah.
So let's go through the charts and let's look at a technical analysis as far as where we are. If you look at the monthly chart of the SPY, what stands out to me is these wicks, right? Wicks, these are bearish wicks, and wicks kind of to me matter more on the upper time frame. And if you look at the month before, we have, the wick basically happens right at this, this support level here. So I think that's a big key for me.
Yeah. Yeah.
So I really, the monthly charts not looking too good. We still got another week to go in September. Now, last week, we just came off a huge bearish engulfing pattern.
Yeah,
So
I talked about this on the show this morning. Is when you see just when you're obviously you see a rejection like this and you see a massive, I mean a massive volume bearish candle, it's you know with a spike, it's just, I mean below important levels. I don't know. It's just it's something you don't want to buy.
yeah, it's not something I want to buy.
Yeah.
So we go to the daily, and then we weren't on Friday because we don't do Fridays, but I mean then Friday we basically gapped through this zone to the other end, Ty. I mean it was like a trap door.
Yep.
This is like Magician Act. Gotta love this. This is our target zone. Well, look how they just like completely went through the trap door to the other side. I mean that's as bearish as you can see.
Yeah. Yeah, it's like almost how you talk about, well, you gap through the 200 or you gap through important levels. This thing gapped through arguably the most important liquidity zone and pivot zone you have on the chart here. It gapped right through it. And so maybe we come back up to retest the zone and fail, but it's not looking good right now where we're at.
Who knows? I mean, the question is, I'm not, I mean, we're not oversold.
Right.
So really can't use that for our basis. If you look at the 4-hour chart, Ty, what are you kind of looking at the 4-hour chart?
Yeah. So we still haven't. So when I look at the 4-hour chart, look at if we've still made any type of retracement for as far as Fibonacci's go, and the fact that every move down followed by consolidation, move down followed by consolidation, it's been consolidating at the 23.6% retracement, which is extreme bearish momentum here. And so there's really one of two things that I see, considering we just broke this previous swing low here, is we either get a rally back up to fill this gap and we get that 38.2% retracement, because this area right here to fill the gap would now be from this swing high to this swing low, 38.2% retracement. So we either, in my eyes, move up a little bit ahead of Fed to maybe give us that retracement and then head down, or we're at that second phase of where we're at the 23.6% and we head back down towards lows from here. So it's just right now we're creating swing lows, new swing lows and new smaller swing highs potentially, and it's just we're at one of those inflection points here.
Yeah, so the chart to me doesn't look, I mean, I like the analysis there, and yeah, I mean, you can see these just bearish consolidative patterns down here, which have been resolving to the downside. So, I mean, I guess we'll see here. Intraday action, 15-minute chart action. I mean, maybe we try to go up and fill this gap like you're talking about, Ty. That would require, get back through, but we're still below on the 5 EMA on the daily chart. It's declining, which is not showing positive momentum. And then if you look in here, I guess the good news is we did kind of bounce off of Friday's low. We kind of, we again searched below for sellers. Sellers weren't to be found. Now the problem is we searched for buyers to the upper side of the channel. That's exactly where we went from the open and got rejected again. So now we're just back into this side. So from an auction process, from a stock trading process, inside day, really buyers, who's in control? Really nobody's in control today. And you kind of got this interesting, lower highs forming right here.
Yeah.
So we'll have to see. Now, if you look at tech, same thing, but tech's so much closer to that all-time low, 52-week low. So, we spent a lot of time below this trend line here. If we look at where we said, now, when we first brought this chart up, I mean, we were up here. And now, again, we're, as far as where this is going, it's resolving itself down towards the tips. And so I would expect it to, come down and meet this area and resolve that lower. If you look at small caps, bullish, probably the most bullish of the indices right here is small caps. Still now kind of holding a trend line in here. And, they definitely look like they want to go up and fill this gap and run into this, at least this 100 here. What do you think about this here?
Yeah, I like that. Maybe IWM leads us up a little bit to fill the gap because, like what you've been saying, it is the strongest of all of them, and it is leading everything. So, could fill the gap first, and then we'll see.
Yeah, as far as the Dow, I mean, not far off from lows. So I just, you can kind of see we came down right to this May low right here and bounced off to the day. So nice bounce off here on the Dow. That actually was a decent trade right there.
Yeah, I actually was talking about that on my show this morning, but I was already over leveraged on oil and gold that I didn't take it. It would have been a nice buy.
Yeah, you already making look the rest of it. Okay. But, again, for you bulls, I mean, stocks can't rally when you got rates above 3.5 here. Okay. You have the 12-month yield, treasury yield, up to 4%, which basically was 2.93% the last time the Fed met, right? Up 100-some basis points. You look at the 2 years at 3.9. You got the 10-year at 3.5. There, thus, you see the inversion that is, continuing on. I mean, it's kind of hard in here to really, kind of build that case. And then, of course, we did have the Fed. We had the housing index, and home builder confidence fell for the 9th straight month. We're in the midst of a housing crash, which leads us down. I mean, all these fools to keep on telling me that we're not going into a recession because of unemployment. I really want to take my fist and slap them across the face. Okay, how many times we got to say that the employment indicator is a lagging indicator? Okay, please, can we say it again? It's lagging. Can we say that again? It's lagging. Is what's leading? Housing. Okay, so again, more home builder information, more shit information showing the downturn in housing. Tomorrow we have housing starts and building permits, so we'll see how that comes in. Again, another leading indicator that's been continually weak. So, and then we had FedEx warning, which is one of our economic barometers. So you got rates just shooting through the roof uncontrollably. You also have copper, another economic leading indicator, kind of just barely holding in here, but again, weak comparatively speaking. So a lot of stuff not to be happy about. And then, like you said, Ty, we'll talk about the dollar in a minute, but the dollar safety trade hasn't come off. But the VIX, the VIX hasn't gone anywhere.
Yeah.
We have not seen capitulation in the VIX. It's been a very tame market as far as that's concerned. Yeah, we're back up to, I think it was, back where we were back in June here, but still, nowhere near where we thought. So, it's definitely something interesting to kind of look at. You got yields, junk yields kind of hovering around lows. You got corporate high investment grade, again, hovering around lows. So you see the credit markets just very not showing me anything that I'm ready to get bullish. And then, you got Bitcoin. I know you're going to talk about Bitcoin. I guess you could talk about that next time. But, to me, the problem with Bitcoin is inflows. And, Market here kind of gave a great chart here, which I love, from JP Morgan. And here you can see the inflows from Bitcoin. And we talked about it, the flow pace, it's just almost non-existent of flows going into Bitcoin ETFs. And so you can't have major movement without major flows. And the problem is, not only do you have people maybe not buying, not shorting, but they're not putting their money into the security either, which you're not going to get a major movement until you get some people willing to possibly jump in. So the inflows, very light, very tough. Ethereum, look at the big rug pull Ethereum had with, nice little rug pull on Ethereum after everybody jumped, all the retail traders Oh my God, Ethereum is, going through with its merge. Time to buy.
Yeah.
This is why we do this. It's called sell the news. It now let all the stakeholders be able to sell their positions, thus, i.e., Ethereum coming down.
Yeah, and I talked about it before, how Ethereum, wherever Ethereum's really been leading the way as far as bearish momentum here, and we had a nice drop yesterday. As far as where I expect Bitcoin to go, it's really been where's Ethereum looking like, because Ethereum led this rally here. Bitcoin followed, lagged later. Ethereum now has dropped below this really important area, this 1420, which has been really a strong area of support since we rallied recently out of the lows here. Now we had a really strong close below it yesterday, and now we're sitting below. So if Ethereum remains below 1420 and it comes back up to retest and rolls back over, then I think we have some more weakness coming into us into crypto here. And Bitcoin's already at lows here, so if Ethereum has more room to go and continue to drop, Bitcoin's not only going to break lows here and retest 16,000 and so on. So, and like you said, inflows, and I talked about it back when we were on this 2020 run, 2021 consolidation, as you started to see the inflows peak and you started to see less investment activity and people were just holding. And now you saw some people dumping, some people underwater, and now the people who were holding through this run up here is now either is mostly underwater. So you're going to start seeing people puke out of it. You already have seen people puke out of it, and there's just no investment activity in it. So I expect this to continue dropping off, and especially if we do have a pretty strong global crisis as far as recessions and whatnot, then
right.
Risk on assets like Bitcoin, Ethereum, and crypto, you're going to see go first, and they're going to be pretty beaten down. So not a place I'd be in. Gold and oil had some pretty good gold and oil trades today. Looking at the overall structure here, let me get rid of some of these lines and clear it up a little bit. So I talked about this trend line here dating back from 2015, and we now last week closed below, pretty strong, below that trend line, below this very important 1680 area that we've been rejecting many times in the past. And so there's massive bearish momentum in this move here. And so looking at the daily, Friday came up to retest, is sitting right below. Today we're now consolidating right below that breakdown. And so it's really just, just going to keep an eye on whether we break through to retest to continue down, or we're just going to break right down through it, because it's really going to determine, what happens Wednesday and what the dollar is going to do. I don't really expect much movement out of gold or the dollar until Wednesday, because I'm kind of thinking like what Mao was thinking is, all right, 75. I think the dollar drops off on 75. If we get a surprise 100, then I think that's when things go crazy and we see it continue rallying the dollar and whatnot. But I still think we sit at 75, which I think is priced in as well, and I think it's going to be seen as dovish. So the dollar will most likely drop off on that a little bit, which then could give us a little bit of a pop in gold here to retest this breakdown of 1700. Ultimately, I wouldn't be buying gold. I mean, it's just maybe if you're day trading it, but I wouldn't be buying it as an investment point, because we're still sitting below this key level, and there's clean range looking down towards 1500. So nothing I'd be buying yet until we started seeing some type of bottoming on maybe the monthly or weekly. Otherwise, any pop we get, it's probably going to drop. But did have a good trade in it today. Took this long into COMEX open right here, and caught a nice piece of that move. Oil had a really nice play today. I talked about it on my show as well. Shorts for gold and oil were very
weak-handed.
Yeah, it would have been a tough trader if you're trying to short oil and gold today. Now, I as bearish as I am right now on gold, and as far as fundamentals, or not fundamentals, as far as technicals right now, oil, I said on the show I was not going to short it today. It was just, oil was entering a major inflection point, a major area where it dip buys and rejects a lot. This 81 to 83 area. We were coming down to retest last week's low. We are coming down, if you look at the 4 hour, to retest this previous double rejection point here. Every time I see this where we have this rejection, came back down to retest that rejection and run, this whole zone here is going to be an important area to look for dip buys off of. And yeah, that's where I took it. I was a little early at one point. I think I got in long somewhere in this here when we were basing here looking for a rally. But then I re-entered. No, it was I longed right in here. Got stopped out and then re-entered off this black line as I wicked down here, and then caught some of this rally up. Didn't catch nearly as much as I wanted to catch. It actually rallied a lot stronger than I thought it would. But like I said, I mean, this whole move right now, and I'm kind of with OPEC as far as the price action goes. It's not really in line with fundamentals, and so I don't expect it to drop off. I mean, technically, if we break this 81, it's dropping off down to 66, which fundamentally makes 0 sense right now. And so I don't really expect it to drop off like that. So it was a nice dip buy at this 81 level, and I really think it would then rally out of here, maybe chop around this zone for a while until, like I mentioned with the IEA and OPEC, the split decisions here, split views of the output and demand. It's probably going to consolidate in this range here until we get some type of conclusion to that. Finishing off with the dollar, just hanging out here and flagging at highs. Same thesis I have on all the other commodities right now is, what's going to happen what's going to happen Wednesday after the rate hike. Wednesday, if we get a 75, I think we drop back off towards 108. If we get 100, I think we pop through to like 111, 112, and we continue our ascent here. But right now, I'd expect a nice consolidation ahead of Wednesday, and I wouldn't expect really much movement into that. If we do start moving into that, then we're probably going to get a continuation in whatever direction we're headed. So, should be interesting, but we'll see. That's it for me. So,
safety trade.
Yeah. I think even if it drops off in this Wednesday print, I think ultimately it continues its descent.
I mean, look, big man's in there. What are we thinking after the Fed speech? Look, this Fed meeting is an important Fed meeting. Okay, today's volume, I mean, we talked about the Queen. UK, Japan have holidays today, so we got light trading just based off of that, number one. Number two is we have the Fed on Wednesday, and this is an SOP. They're going to also be delivering an SOP, summary of economic projections. And I think pretty much, I mean, look, the debates between 75 basis points and 100 basis points, I don't see really the 100 coming into play. If it does, it'd be interesting to see what the reaction is. But I think we're definitely going 75 basis points. The other issue is really that SOP, because we also, in the time frame we're at, because of the quarter rim, we're going to be adding another year of projection, which is 2025 projection. So we're going to get a nice deep look at how far the Fed really thinks they're going to go before they're going to start cutting rates, and how far that terminal rate's going to go. So I think this is a really big Fed meeting as far as that's concerned. And I think, look, again, we could go almost anywhere, but if you look where we are positioned, we're almost positioned to head down. I mean, the inflation print, inflation is not coming down, okay? I mean, I don't know, anybody can look at inflation and say inflation's getting better or it's getting rosy. Sticky inflation, which is an inflation such as rent, such as wages and stuff like that, it's just not moving, and you're not going to get it to move. And so you have the inflation having a hard time coming down when you have gasoline prices falling as much as they are and having gas come down. Well, what happens if you get oil ramping up? What happens with, electricity is going through the roof? I showed you the Con Ed bill warning for New York City and upper state New York all through as far as what they're expecting for the winter, 25 to 30% increases across the board. So I don't see how, and so the Fed knows that, and this Fed has really gone all Volckerish to the point where they rather see, they're not defending the market, they're not defending the economy at this point. And so, if you're thinking you're going to get some kind of dovish tilt, just not going to happen. The only thing I could say is that everybody's just already so tilted to one side from the short side. You don't have many people reinitiating shorts because they're already in a short position. So what you got is these retail traders that just, addicted to adrenaline, trying to buy up a market and buy up charts that look like shit. And ultimately they don't move markets anyhow. So, I, to be honest with you, big man, I don't see the market going up. We also got quarter end coming up as well. I think, and the second half of September historically has been the worst months of the year. And so we're heading into the second half of September already with a negative tilt. And so that could lead us down even further. And that's, and the good news is recession would get inflation down. And that's why they want it. They're really not concerned about, really quote unquote defending the economy at this point.
Yeah, right.
And the Fed funds rate has never, if inflation higher than 5%, Fed inflation has never come down without the Fed funds rate going higher than what the inflation number is, and we're nowhere near that. Okay, which would suggest a lot further to go. So I don't know how anybody could be tilted bullish. There's just no thesis to it to me. But as traders, we got to put our opinions in the backside. And you said it before, Ty. Market relationships are just not really showing up. I mean, that's why Peter Schiff's getting his ass handed to him.
Yeah.
Because you would expect gold being an inflation hedge. You would expect Bitcoin's, but was touted as an inflation hedge. None of that stuff is happening. Yeah. Okay. I mean, look, even though if you go to 10 out of 10 deaths on the street, okay, and all the funds that we're talking to, other fund managers, there's not one you're going to find that has a bullish tilt that they're willing to defend. Okay, it's indefensible. You can't look at inflation and basically inflation is supposed to be transitory, right? Well, now we're in inflation supposed to have peaked. Well, how's that going for us?
Yeah.
Okay, it kind of almost is reminding me the inflation has peaked. Is reminding me of the inflation is transitory crowd. They're just moving to the next losing position. Yep. So we've been telling you guys. I mean, we've been through this. We've been trading this freaking stuff for 30 years for crying out loud. Okay. And Charlie Bellio, which is a great follow on Twitter, and I highly recommend you follow him. I'm going to pull up his tweet. Let me see if I can pull this off here. I'm going to pull up his tweet. I'm not even sharing. Isn't that funny? It would help if I share. It's like what I do on my mentorship meeting. So look at this here. Okay. The only years with higher volatility in stocks at this point, 2022, is the 1930s Great Depression, the dot-com crash, the global financial crisis, and the COVID crash. Is that fun?
Yeah.
Is that something to be bullish on?
Oh, yeah.
Okay. Okay. So, I mean, we had shit, basically, look, the Fed's not going to, only way the Fed may tilt and may step in is we have a liquidity crisis. That's what they care much, because if we have a liquidity crisis from QT, and guys, remember, QT just stepped up a gigantic notch. We've never seen QT. Last time we had QT, they bailed in 2 months. Okay, that was in 16. Last time we had QT, they bailed. We've never seen QT last this long, and let alone at the process. So not only are we raising rates, we're going to, jam up the markets with QT, and we're going to be, offloading assets off of our balance sheet. So, I mean, I just don't know how you want to step in. And that's why every institution, professional trader you can find is tilted bearish. And like I said, the only reason that you could have to be bullish is that everybody's on one side. But how's the dollar shorts work for you?
Yeah, right.
I mean, everybody's and their mother's getting cut up trying to short the dollar because everybody's long the dollar.
Yep.
But it keeps on going where, Ty?
To the moon.
Right. So, all you can do as a trader, these are very difficult times to trade, okay, because the thesis is so clear, and everybody's so on one side. The only thing you can do as a trader is just trade around what you think, right, and just trade market action. Because if we trade what we think, the market should be really, should have crashed by now, and it hasn't done it. And we showed you in VIX, which, again, the whole is the bear market over, and if we hit lows, I mean, we've never had a bear market without the, and a low in a bear market, never had one without VIX topping out at 45 in some type of capitulation trade. Okay? We've never had that. We haven't had this in here at all. So, the VIX has just been very, very tight. So anyhow, the point is, who knows where the market's going? Nobody knows where the market's going. All we can do is say there's a lot of geopolitical risks. There's a lot, I mean, the market economic, mechanisms are broke. And as long as the Fed is raising rates, and as long as the Fed is doing QT, I'm not establishing as a fund long-term positions.
Yeah.
So that's what we're looking at right now. And, we've done really well as a trading group. We've done incredibly well because we're focusing on the type of market it is, which is short-term market. And speaking of the market, I mean, do you see this open door? So you remember the Zillow disaster, right? Well, Open Door is in their own little disaster now.
Oh, Jesus.
Okay. So Open Door, it's kind of like Zillow, lost money on 42% of its real estate transactions in August.
That's good.
So they're offloading. They're going to be shit in the bed. They're close to bankrupt. Just like Zillow was when they decided they were going to stop. And look, let's go to the monthly chart on Zillow, and we can revel in this chart. Where we went from over 200 down to 32. And so now we got another Zillow-like company that was up around 40 and now down below $4 a share. Anyhow, yeah, no problem, big man. And look, Mark, he still thinks inflation's transient. I love you, brother. That's good stuff. Good stuff. Yeah, I mean, look, nobody knows where the market's going, but all we do know is that it's kind of tough.
Yeah.
Kind of tough where we are. But you still got some trading opportunities in here. Okay, you still got some trading opportunities. Netflix was on our list again today. I really like this chart. Netflix and Disney, I mean, they're bringing ads to streaming. Okay, and you had a nice little run up. It's had a nice little run up. And then they just sold it off today. So, but I think Netflix is something to watch going forward. It's kind of, one of my little barometers here, but Netflix still, I think, it's look at all the moving averages, kind of, pointing up, kind of aligning themselves. But you still got this declining 200. But Oppenheimer came out today and basically said they put a $300 price target on Netflix. So that would put us pretty much almost halfway past this gap, which, might as well just go fill the gap at that point. So I think there's an opportunity there. My stem, remember my stem, Ty? Look at this trader, man. It's still, these are the charts you want to be trading, guys. Right, Ty? Okay. So to me, you want to trade charts like this. You don't want to be trading charts like this. And again, that's not to say, pick on Mark because, it just gives you an example of the chart you don't want to pick. I mean, because these charts have a tendency to resolve itself to the downside, right? You get a chart like this, you get a chart that, at least looks like it's getting ready to go. You got United Health just hanging up there, doing really well. You want to be trading good charts. You want to follow stocks with good charts. One of the stocks that we had today that was been on our list for a couple of weeks is this Wolf. And, gave a nice little trade in the morning, right out of the gate, up to the upper initial zone. So it was a nice trader right out of the gate. Could have got yourself a couple points, 3 points on a $120 stock. And then it's coming back down into the range. But this is a decent chart to trade. Okay. Decent chart. I like that a lot. I like the stem chart a lot. I actually like the Netflix. What was in play today is the fertilizer stocks. So, we talked about Mosaic. We traded Mosaic forever. Mosaic, nice expansion day, 5%, covering all the moving averages in one day, Ty. What do you think of this chart?
Yeah, that one is a massive, it's really interesting to me because you see a massive bullish engulfing, obviously, but then you see a massive bearish engulfing like a few days ago. So it's like this range here provides a lot of volume. And so once we break out of this range here, I think you get a nice move because there's a lot of accumulation going on right now.
Exactly. And it's kind of squeezing. When you get the moving averages tight in there, it's squeezing, right?
Yeah.
So you got Mosaic, what's another fertilizer? You got the CF, Industries, again, nice big bar. I think, it's LXU is another fertilizer company up almost 6%. And again, all these moving averages tightening in here, which, for the industry getting ready to cool. Big man, look, and here's another thing. We had FedEx, which is an important deal to me for the economy. Pretty much says we are in a recession. And you had AMD, NVIDIA, and Intel basically all telling you that CPI demand has fallen off a cliff. Okay? So Intel, old school tech, down. Look at that chart. AMD, new school tech, down. Look at that chart. Okay? NVIDIA, down. I mean, look at this dog shit chart.
You know what's interesting to me about NVIDIA? Look at the weekly chart. It's sitting on top of its 200-day on the weekly chart.
Yeah.
And it's at this really interesting consolidation zone looking left. So, yeah, I mean, it's obviously not the time to dip buy these right now, but it's at an interesting level here.
Right. It's at an interesting level. I'm not ready to dip buy NVIDIA because if we're going into a recession,
yeah, right.
Where's NVIDIA going?
No, right. Again,
it's not going up.
Not a dip buy time. Yeah, definitely not.
Yeah. So the thesis is the problem is you're still, even though NVIDIA has come off from 340, and this is a quality company. That's why we focus in on NVIDIA. Come off 340 to 130. Okay. I mean, it's halved more than half of itself. Okay, come off about 60%, and it's still, if we're heading into a recession, it's still got further to go, and you're gonna be able to buy this thing down maybe sub 100, and that's the thing. I mean, these markets were trading at incredible PE. It's comparable to 2008. It's comparable to the 2000s, and they're all coming off, and they're all following the same pattern to readjust itself. I think the next earnings season is going to be one of the worst earnings seasons we've seen in a while. Let's face it, this past quarter that we just had in earnings, they did a little bit better than we even expected, even with the readjustments in earnings. Okay? So I think you're going to see a horrible earnings season coming up, and that's going to be maybe to me, okay, maybe that marks the bottom of this little downturn, because we do have in November elections, and I'm looking for possibly maybe getting some positive action finally into the midterms. But I guess we'll have to see. So I'm patiently, anxiously waiting to add on NVIDIA. And there's a case that could be made if you're investing to add a little NVIDIA in here, because like you said, Ty, it's an interesting level on the daily chart.
The weekly, yeah.
Yeah. Yeah, and a good point, Mal. I mean, look, Nvidia up here was basically booming with crypto, right? With crypto miners buying the chips up, and with COVID, squeeze of supply and stuff like that. So you can pretty much see, I mean, they don't have those tailwinds like they had before. And if you go to the monthly chart, if you go to the monthly chart, I mean, and Nvidia has split in here. I mean, you're talking really, if you're looking to me for a fair value zone, you're probably looking at the 73 level.
Yeah, dude.
Down on Nvidia.
Yeah, because on his note, with like the where crypto's been going since 2015's rally here, it's been just steadily increasing with Nvidia. So definitely has some room to go.
Yeah, I'm definitely salivating on Nvidia, but now's not the time for me if we're heading into a recession, because the fundamental narrative then to me is out the window as far as that's concerned. And Mark, the only thing I want to say about Mark, I don't think I want to say, because you kind of got lost in the mix back there, but you're saying Meta, it's the COVID crash. That's real. The problem is when you fall over the stock, there's always a level you're looking for, and it's always lower. Okay, the level that Facebook Meta had to hold was the 150, the 154 level, 155 level. That's the level it had to hold. It didn't hold. Okay. Yeah. And that's why you see a break and look out below. Okay. So that's the level that had to hold. All the other levels are inconsequential to me, because they're more than 52. They're still farther away. I mean, again, you have that 136 level, and then you do have this 121 level. But to me, I don't know. This is a broken stock. So there's a lot of better, and it's not just that it's about Meta, right? The company. It's about opportunity costs for your money.
Yeah, right.
For me, about opportunity costs. So that's the way I'm looking at that. I'd rather be, well, not now. I mean, they're kind of overbought, right? But the solars were a lot better opportunity costs. I mean, look at First Solar here. Look at this monthly chart, Ty.
Damn.
Look at that monthly chart on First Solar. Okay, why dick around with these? I mean, and Mo's not here to defend himself, but we always look at these ugly ass charts, and look at these. I rather buy good charts because you get better price action. I mean, First Solar, from its record earnings, the gap up from its record earnings, has rode the lightning up. I mean, this has been in an active sequence from 88 up to 136 without even pausing and hitting its 21. That right there is a stock that's being bought up by institutions, okay? This is a stock that's not being bought up by institutions. This is a stock that's not being bought up by institutions, okay? This is a stock that is not being bought up by institutions. This is a stock that's not being bought up by institutions. I don't want to own these stocks, okay? I mean, they don't give you a good risk to reward. I mean, look at this stock. Has been an ATM machine for us almost every day. Look at this stock.
Yep.
EMPH. Now, again, not saying, these are breakout stocks in a, bear market. So I don't know, I'd be chasing these stocks in here, but we've been talking about these stocks for at least 3 months. Okay. And now we're really getting Mal's ear up, right? Is a stock that's even better is Tesla. Look at Tesla in here. I mean, Tesla, not a bad stock. Not a bad stock in here, and kind of holding up and holding in here, and looks like it wants to break. If it breaks this level right here, this 315 level, I think you can get going. So, EV, healthcare, some healthcare, some of that stuff, doing pretty decent as far as that's concerned. Apple, you and I not impressed with the Apple Technology Summit that they had September 9th, but September 7th. This is an interesting level to bounce off of Apple, but I'm still not ready to buy Apple.
Yeah, right.
So interesting level, and we talked about this triple top, same triple top it had back in 2008. Let me see if I can pull that up. See if I still have that marked out. I don't know if I do, but back in. See this here?
Yeah.
There it is. Okay, this is what Apple did in 2008. Triple top, right? 1, 2, 3, or 1, 2, 3, whatever, however you want to look at it. Okay, 1, 2, 3, triple top. And look what Apple did. It went basically from 7 to 3. Okay, and again, it's split several times. It wasn't trading at 7 back then. This is, a split adjusted. But this is exactly, and so I see the same thing happen at Apple now. 1, 2, 3. Okay. So that would take Apple where, Ty? Somewhere down here,
yeah,
right?
100.
Yeah. Oh, look at that. It's like a doubly printed line. So if you want my target in Apple, that's where my target in Apple is, right there.
Yeah.
Okay. So, but it gave us a good clue today as far as the strength in Apple today was a really good clue. Strength in Tesla today as far as not to initiate on the short side, and be careful in there. Now, a stock that we brought, I actually recommended this one pre-market. It did pretty well. Is this PRPL?
Purple. Look at that volume spike. Damn.
Yeah, you see that volume spike? Yeah. There you go. So we were trading this one pre-market, and you can see it was this flat top break. I love this wedge flat top break off of 393, took you up, gave you a nice little return up in there. And then look what he did going in pre-market. If you were buying this, Ty, we talk about this all the time, right?
Oh, yeah.
Mm-hmm. Now, they did buy it up, still kind of maintaining some strength. But look at this. Look, if you see this, guys, look at this. There's somebody selling at 410.
Yeah.
There's a seller right
Definitely.
there. Okay. If you're buying this and you don't see that seller that started in the pre-market all the way through, then institutional trades leave footprints. This is somebody on the desk that's offloading insider shares at 410. I'm telling you right now. That's footprint as smooth as could be in there. So, this thing really is not going to go on. So, Born Alarm says, personally, I think the time of tech is over. Commodities will remain best investments over the next 10 years after the reset.
Dude, you're crazy. Let me tell you why. Do you understand what generation's coming up next? The generation that is just so involved in TikTok, involved in all, normally, look, I agree with you. I would agree with you as well, but you got to think logically about what generation is going to be the innovators coming up. It's the people who are all into TikTok and shit.
TikTok people.
So,
they're trying to ban TikTok.
They've been trying to ban it since Trump was in office.
Look, here's the thesis that Borlam's talking about. If we're heading into a depression / like we're really going to F ourselves up, then I agree. Commodities the new tech, right? And it's going to be that way for the next 10, 15 years. But I don't know. I'm not sold on the fact that that's going to happen. But I could see, where I couldn't see that 10 years ago, I could see a pathway for that process to happen, but I'm not on that train.
Yeah.
I'm not on that train because tech's always been and always will. There's too much money sitting in the world today, and it goes to tech. It's just, it's been trained to be invested. It's not necessarily where the money flow is going to go, and the money flow typically is going into tech. Now, I do agree that there is a possible pathway where you could see, if you're talking about the world coming to an end, and we're heading to this third world war, then yeah, commodities are going to be the game, man.
Yeah, and I was really more so just kind of making a joke out of it. I do agree that commodities will probably be a really good investment. I just find it funny that now exactly this generation, that generation is in for a big rude awakening. Oh God.
Yeah, I don't understand. What can I can't do anything with corn pie. I can't
yeah, what do I do with this corn? I was talking about it on my stream this morning. My generation was the last good generation before technology took over.
Yeah, I know. I look, it's the same all around. I don't believe the Fed has it in them to destroy us. I mean, Powell acts like he wants to go full Volcker, but I don't know. I think we're going to come back from the abyss. But I mean, there's still risk coming off. I mean, did you see my V root today? Down 10%. 15%. It was down even worse. It went down to $10. Look at that drop, Ty.
Oh yeah. Yep. Look at that. Shit.
I almost dip bought this, but I thought better. Nice little drop. My ENVX still kind of hanging in there, kind of have positive days. This is another chart that I like. Nice bounce off the 21. You got this little triple top hanging in here, up almost 3% today. But nice little dip buy out of here. So it was a nice little dip buy opportunity. It's kind of always been on our list, but not my focus today. So, all right, well, we'll get ready to wrap it up, but Mo wants to know, you guys think a short-term bouncing 392, then selling towards 377. I think we're selling to 280. Wasn't that my level, Ty?
Yeah, 280. I mean, Mo, I could see. Honestly, I could see that. A little bit of a retest of that 390 before we. Now 392, maybe 390 is my level, but.
Yeah, it's basically what Tyler explained at the beginning of the show, right?
Yeah, that's what I was talking about. I know, Mo, you weren't here, so I'll kind of draw it out for you real quick. Is when you have extreme bearish momentum like this, and this, in my opinion, is the most important pivot level for the market, is we gap below. I'd expect heading into Powell, we get a little bit of a retest rally to 390, and then we dump towards lows. So kind of in line exactly what you're thinking, Mo, and that's where I'm. That's kind of where the boat I'm in as well. I don't know what Mike. I don't know what thoughts you kind of have about that as well, but.
Yeah, I can't do it in a nice, pretty crayon that you do.
Crayon.
I always F the shit up when I try to do that. But I think if we can't or tomorrow morning gap above this 385 level, if we can't get up into here and close into here, then I think we get rejected off of here and drop down to this 380 level.
Yeah.
So I definitely see that thesis where we can get that bounce up here. It's just interesting to me, and I know this is probably a pattern, and I haven't researched it yet, but I mean, it's interesting that we have a gap here at this lid, and we have a gap down here where we're kind of holding.
Yep.
Okay. I just find that interesting trade action. Okay. And so, again, what I find, we gapped above this trend line, gap below it. We gap below this target zone. So does that mean we gap back above it or in it tomorrow? So it's just interesting, really tough, tricky trade action in here. And so for me, I just want to get through this market.
Yeah, dude, me too.
I really want to get, can we please get a decent market that we had? I mean, I don't even need the 2000 market.
Yeah, well, we were spoiled with Trump's market too, so it's like...
Yeah, I'll take the 2021 market. Even the end of 2021.
Yeah.
Tell me to go buy it, and then the world would end because Facebook wins at my back. I don't know. I have a hard time thinking institutions are going to do anything before the Fed to get this push up is my problem. Yeah. Because ordinarily, I agree with you guys. Now, look, this is positive. I mean, we're not falling apart today. Mm-hmm. We're not falling apart at all, but look at the volume.
Right. It's dead.
So, again, I'd say don't short a dull market. So, I just, look, right now, we can't predict it. It could go either way, Mel. I think ultimately we have issues, and I think we retest these lows and maybe go lower, but we'll see.
Yeah.
We'll see. I mean, I thought to me, given all the issues, I thought the market would be way down lower than it is.
Right.
And as do a lot of professionals. And I think that's what's really holding some people onto the short side, maybe a little bit longer than they wanted to. But I tell you what, Mosaic up 7% today off the open. Off the open. Tyler.
Dude, the elevator, straight elevator ride up.
7% off the open. That means if you bought the opening print, market on order, opening print, okay. Yeah, and I went over that borderline. You must have been sleeping. Which is okay. I went over the bearish engulfing on the weekly. So, huge bearish engulfing on the weekly on the SPY.
That's fine. He sleeps during my show too, so it's.
Let me get back to the trade analysis tab here. Hold on one sec, so you don't see all these fucking lines. No, I there's something wrong with me. I meant to go to the monthly tab. There you go. There you can now see the nice little bearish engulfing weekly candle that you got here, opening out at the bottom end of this range. So, yeah. I mean, if you showed somebody that chart, what are you thinking, Ty?
Yeah, I mean, I think down we go. I mean, a lot of bearish momentum in it right now. So.
Yeah, I didn't know Borderline was a millennial.
No way. He's not a millennial.
He is.
Damn, we're in the same generation. I thought you were
like
an
you
old
guys.
man.
That's why he's calling gold sexy.
No. He's got to be an old man to call gold sexy. He's definitely an old man.
So well, Tyler made $5,000 today. So he just missed the cutoff. He's a late.
So he's the beginning. He's an early. Okay, yeah. So he's one of the early millennials.
I'm a boomer, man. Is that what I am?
No, you're the one after the boomer.
What? I'm a baby boomer.
No, you're a Gen X.
I'm the one after the boomer?
Yeah, you're a Gen Xer.
What's a Gen Xer?
Just I don't know. Is anything good coming from the Gen Xers? I'm not sure.
Nothing. We're the slack. we're the slacking group. I mean, look. Rates. Guys, rates are going back up. I mean, how are we going to get a rally with rates this high? Millennials from 81 to 9. What?
Oh shit! I'm okay because I'm in 96, so I just made the cutoff up there.
That's a big gap.
That is pretty big.
Mal's a millennial too. Holy shit.
Mal? Oh god, we're all millennials in here.
Oh my god.
That's why you guys are so smart. Us millennials, man, I tell you, fucking geniuses.
Yeah. Oh my god. Help me.
That's what I'm saying. We're the last good generation.
We'll have we're going to trade obviously Fed Day on Wednesday. It's going to be an important one.
Yeah.
So we'll have a little bit more of a preparation day ready for you. As far as where we're going. But it's an important one, this one, guys.
Yep, it is.
Guys, this is an important one because we have a new economic projections, SOP. We're going to get 2025 projections. So we're going to get a lot of information out of this Fed meeting, which also leads me to believe that's going to put a little bit we did that at the beginning of the show. We tried to figure out what the bullish thesis was, and our resident bull couldn't come up with much other than what are our resident. I could go through the chat. What are our resident bull come up with?
Just too many people are bearish, and he likes CPI.
Yeah. So the bulls are clinging to the CPI is top narrative.
Oh man.
And that everyone's bearish, so the Fed's going to pivot. That's the thesis. Which. Look, I mean, it could happen.
Mark must be from the Gen Z. You're definitely from Gen Z. Ain't no millennial.
Definitely happen. Everybody's gloom and doom. Look, that's typically, Yeah, I mean, Mal, look, you're a resident bear, so we didn't ask roll call the Bears. I mean,
yeah, we roll call the bear.
You're now
party.
leading the charge. Okay, you got the baton up in the front, so you're leading the charge. But if the market recovers from recession, be very, very bullish. Yeah, the problem is though. Okay, we're now, and we talked about it. The GDP now, we get a new one tomorrow, by the way, guys. We get a new GDP now. It fell to 5% on the weak retail sales and the readjustment on retail sales. So if we get a negative third quarter GDP, look out. I mean, and that's my thesis. I mean, my thesis is that this next earnings, we're going to have a tough sledding in this next earnings calendar coming up, and that's going to knock down any rally. So we'll see. And it would be great if we did get a bounce back up into the 200. I actually would love that. And then kind of came back.
Then get a rip your face off drop.
Well, maybe Ty, and you draw this. Maybe we come down to here.
Let me draw it. All right, I'll draw it.
Yeah, come down to here, and then we bounce up to here, which is where the 200 is going to be by then. I'd rather have the 200 down below this little top out level would be perfect. And then you got a nice little, that's what I would like.
And then why?
Right.
Yeah, that's it. Screenshot it.
So that's my thesis. I'm glad you can. Yeah, but I mean, okay, we're down 20% from all-time highs. How much did we fall from 2000 all-time high? 50%. Look, Mark's a millennial.
Oh, Mark, you're letting me down here.
He's a millennial too, so.
He must be a 96 millennial with me.
Oh, you effing millennial. Anyhow, I mean, down 20% isn't nothing.
Yeah.
I mean, it's barely a bear market. Big man's in his 20s, yes.
Depends how 20s are you? That Gen Z? I'm in my 20s. I'm 26 though, so I'm a millennial.
Well, that's true, Mal, and that's the point. Back in 2000, when we were at all-time highs for the SPY, the valuation eclipsed even what we saw back in 2000. If you go back to the Buffett indicator, gives you that best view that we follow in our playbook. I mean, that gives you the best view. I mean, if you look here, we're down 20% from all-time highs. Okay, that's nothing. That's what I'm saying. That's another reason I think we have so much farther to go. I mean, we have basically just tilted into technically a bear market when really, the price action says otherwise, right? I mean, we've been in bear market a lot. The stocks have been in a bear market a lot more. But if you look at 2000, so let me get my handy dandy tool out here, Ty. If we go right in to here, 52%.
Yep.
Okay. 52% we fell from the 2000. Okay. Let's do 2008. I did this for you guys once before. Okay. 56%. Okay. Yeah. See, I hate this. Oh, hey, it's a nice little trend line in there. Okay. Where are we now?
I can't see it. It's off the chart.
Off the chart. Where are we at? What's that say? 19%. Where did we go down to? 24% at our, all-time low. So, with the thesis, Mark, that you're bringing up, we're halfway through our decline.
So where's 50% at? Draw it out.
I'll draw it out for you guys.
56%.
That's a great question, Ty. A great question. Where's 50%?
Oh, baby, 220.
Look, it takes me to the level I've been telling you guys.
Come on now.
I mean, you think I come up with 260 out of my head for nothing?
God, that's so... God, that makes me just... My hair stand up.
I'm glad you said your hair.
I just pivot.
Anyhow, that kind of gives you an idea of, where we are in this little groupling here. And remember, we had, as Mal pointed out, way worse valuations here than we did back here.
Yeah.
And even here. So if you're using it as a metric, we got maybe even farther to go. So, but I mean, when you had the COVID crash, how far did we drop during the COVID crash? 35%. So let's say you just want to even match the COVID crash, right? 35%. Where does that take us down?
My 320 level? No, 315, 320.
Right there. 315, 320, there you see. So that's the 35. If you want to match what we did for COVID, that's where we go. If you want to match what we've done every other big bear market, that, you know, this is how much farther we got to go. So, I don't know. But yet everybody's saying we're going all-time high. What do I know?
Yeah.
I'm a fucking baby boomer. Gen X or whatever the hell I am.
Oh, man.
Yeah, and that's general rule of thumb. I mean, outsized moves typically have outside moves back as far as mean reverting. It's like a rubber band, right? The farther you stretch that rubber band, you know, the farther back you pull it, the harder it snaps back.
Yeah, right. Oh, Mike, you got another Gen Xer in the chat.
Yes, Enderwigan.
You guys can be
Gen Xer.
Damn Gen Xers,
To the moon. Wait a minute, though.
Hang on, wait.
What do you mean we're going to the moon?
You Gen Xers got to stick together.
Right. Going to the moon.
Oh man.
You say we're going to
he
the
must
moon.
be a late Gen Xer.
You must have did a lot of that. You did a lot of those mushrooms back then. That some of the other Gen Xers that I don't know anything about did.
He's the other side of the Gen Xers.
No, it's good to have another Gen Xer in there. I mean, we can't define what we are known for or what we did or anything. We're barely holding on to life. I mean, Jesus.
Oh, man. All right. Well, that's
all right,
fun.
guys. Well, that was a lot of fun. It's good chin wagging with you guys, but I got to stop chin wagging, and I got to go, and I'm not going to trade this market.
I got shit to do.
Tyler already made his money in the morning, and I'm not trading anymore.
Yeah, I'm done, dude. I had a nice couple, hour and a half.
Don't worry. Markets will get better, guys. The markets will get better.
Yeah, eventually.
Just, make sure you got capital. Make sure you preserved your capital.
Yeah, for when it does get better.
Right, and not try to buy ARK at the bottom every time. Make sure you preserve your capital for the good trading days because they're going to come back at some point.
Yes, sir.
And don't forget, we're going to be we'll be trading live through the Fed, so that'll be fun.
Yep. Thanks, guys. Appreciate the tune in. Have a good rest of your day.
Stay trading, guys.
See you tomorrow.